you. All right. Well, welcome to me. It never goes smoothly. So every year we do the eligibility training here because we all are in the same boat. No matter what campaign you're with, except for CFC Overseas, you have to do the charity eligibility process. So you probably got tired of hearing from me in the past because one of the recommendations we got was, why don't I do a video in advance and then we'll do highlights here. So you should have received an email a few weeks ago where we provided application training materials, including review sheets, model letters that you can send to the charities if they were denied or if they appealed a denial to the LFCC. But we also included a YouTube clip in there, and so it's about an hour long. And I gotta tell you, it's such a weird experience to sit in a web studio, and it's all in the dark except for these bright lights on you. And there's a sound guy over in the corner. But for an hour, I'm talking, just talking, hitting slides. I have no idea, like, if I'm on screen, if slides are on the screen. And since you're not getting that reaction from an audience, you're starting to, or at least I'm starting to wonder, is this really boring? What did I just say? Where am I? I'm getting lost. Do I have something in my teeth? Have I been talking for 45 minutes with something in my teeth? So as you watch that video, you'll probably see my mental state decline over the course of 45 minutes. But anyways, I encourage you to take a look at it before you start the process, particularly if you are new to the CFC. So since I have 1 hour for this session, I'm going to fly through some of the high points of the process. And we'll stop for questions periodically, but really that video is the more comprehensive source of information. So I just want to touch on the application timeline. Campaigns have some flexibility on how they do this. All we care about is that your local application deadline does not go any further than April 1st of 2014. You can set it as early as you want. You have to have the application period open for at least 30 days, but it can be as early as you want. I know National Capital Area and Chesapeake Bay have January deadlines, so you can go fairly early. And then the LFCC has as much time as it needs from the time that period closes until April 30th to make its decisions and notify the charities of those outcomes. If you get any appeals from the charities, you have until June 4th for the LFCC to make decisions and notify those groups. And if you sustained an appeal at the local level, they have the right to come to OPM and say, I think the LFCC is wrong, or I want a waiver of the regulation in my case. And we get those piecemeal. They come in from April, May, June. Our target date is by the end of July to have everyone done so that you'll be ready to go to print. And I don't think we've ever gone as far as July 31. It's usually done shortly after the 4th of July, if you stick to this time period. Now, campaigns are encouraged to sample the applications. It's not likely that you're going to have a committee that's going to be able to go through every single application every single year. So what we advise is that you go through the Federation membership and review about 20% of those members to make sure that the Federation is doing its job. Now, as you may recall, a Federation must certify that each of its members meets the criteria. So they have received the applications from those groups, they've gone through them, they've scrubbed them and perfected them before they landed on your desk. So you're going to double check and make sure that's the case before you accept all of the Federation members. Also, OPM recommends that you do a completeness review of each charity before it goes to the LFCC level. I get frustrated with national groups and the rate of incompleteness among them, where there's administrative oversights where they have left off the signature on the 990, or they printed every other page of the audit. They didn't realize that it was double-sided when they put it in the copier. So to avoid going through a denial process, going through an appeal process, we go through in advance, make sure we have everything we need, and if we don't, we send an email to the charity to give them a few more business days to get that to us. This doesn't mean that they have more time to be audited or create documents that did not exist. It just means they're able to fix these minor deficiencies that otherwise would not have led to a denial. In your reviews, you're basically going to look at 5 documents. You got the application form itself, and that just has certification statements with check boxes next to them. A couple of those statements are or statements, where they can only pick one of the 2 options or one of the 3 options. But they have to check a box next to each one of them. If they fail to check the box saying, I certify that I provided human health and welfare services, or I certify that I'm audited annually by an independent CPA, we will consider that an acknowledgement that they do not meet this regulatory criteria, and that would be a reason for denial. But then we got these 4 additional attachments that support the information that they're submitting through those certification statements. You got the service description, their IRS determination letter saying that they are truly a tax-exempt organization. Some groups will have to provide audits, and we'll talk in a little bit about why some don't. And then we have the IRS Form 990. So we're going to delve into each one of these in a second, and we'll stop after each one and take questions on that specific topic. Okay, so on the first one, they're telling you if they are local, adjacent, or statewide. So if they're local, that means that they have an office physically located within the campaign boundaries of your area. That office has to be open 15 hours a week, and it also has to have a dedicated phone line. But because employees don't necessarily live in the campaign area where they work, we do allow for charities and neighboring campaigns to apply to your area. So as long as the organization has a physical office in a neighboring campaign anywhere in that campaign that has an office open 15 hours to the public and a dedicated phone line, then they will qualify as an adjacent charity. So one of the things I want to go over are myths of the application process. And so this is our first set of myths. And that is that a charity has to be located in a county that borders your campaign. So, for example, here in Atlantis, the Atlanta-Athens area CFC, and it's a pretty big area, and it borders Chattanooga. So, you know, Chattanooga their campaign's primarily in Tennessee. Any charity in Chattanooga's campaign area is eligible to apply as adjacent to Atlanta, no matter how far they are within the Chattanooga area, CFC's area. It doesn't matter. It's not campaigns that border, it's anywhere within that campaign region. And then another common misconception is that a charity has to document that they're providing services in your area. I should qualify this. An adjacent charity must certify that they're providing services in your area. And that is not true. They're showing they're providing services in that neighboring area where they're located.
Can you clarify one thing on that? I wonder if everybody can hear me. When you go back to that portion, it says located in a county adjacent to yours.
Oh, sorry.
It should be region that's touching yours.
Yeah, these myths are the misperception. These are wrong. Anytime you see a myth, it's wrong.
Okay, that's
Yeah.
okay. I got it.
Yeah, thank you for clarifying that. So how does a charity explain what they're doing in your area or neighboring area? It's pretty simple, actually, and anybody who is spending more than 20 minutes, 30 minutes on this, or creating a document that's more than a page long is probably doing it wrong. We need their elevator speech. Tell us who, what, when, and where you provided a service last year. They should be able to rattle this off in their sleep. So, when they do this, what we don't want are things like mission statements or these are the types of activities that we offer in our area. We're looking for actual things that happened within the last calendar year. We don't care if the only reason that they're in your area is because they have board members there or staff or they're a membership organization and some of their members are there. We don't care if they're a facility located elsewhere, but citizens of your area receive services from them in a different area. And I'll give you an example of that in a moment. We do not want them to describe services that are provided by any entity other than themselves. For example, if they are a chapter of an organization, they cannot claim the services that their parent organization provides. It is the chapter that is applying. Everything needs to relate solely to the chapter. And then finally, fundraising activities. Because a fundraising activity shows that the primary beneficiary of that service was the organization itself, it does not qualify for CFC purposes. Now let me give you examples of what's good, what's bad, and how easy this can be. So in this first one, we got a group, these are all going to be Georgia area examples. So we got a group in Athens that held its annual meeting in November of 2013, and staff made presentations, 120 healthcare industry professionals attended. This is beautiful. We got who, what, when, and where. One paragraph. I don't even know if that's more than 2 or 3 sentences. That's all we need. Now here are our brief examples that do not work, where they didn't give us enough information. So we got this group in Atlanta that they're applying to Atlanta, but they're actually based in San Diego. And they're saying that I had 300 people from the state of Georgia come out to San Diego to our facility. Therefore, I have a presence in your area. And the answer is no. You do not have a physical office in our area. You're not a statewide organization because you're not providing services here in the state of Georgia. So you don't qualify. We hope you apply to the SoCal CFC in San Diego. Second one here is Macon, Georgia. And it's an organization that held a fundraiser on Independence Day. And although they give us the date and how many individuals attended, it is a fundraising activity which negates it as an eligible service. Now the next one, it's Americus, Georgia, and the organization holds annual health fairs. They're free of charge and anybody can come. Well, this is like those services that are offered. It's not telling us that I actually did this last year, because we're going to look at calendar year 2013 during this cycle, and it doesn't tell us how many people attended. So they need to beef this up just a little bit to qualify. And then we have this last one. This is in Atlanta, and it's a chapter that held a workshop. It was in their fiscal year 2013. We got a couple issues here. One is the use of a term fiscal year 2013. And why would that be a problem? It would be a problem if the fiscal year is different from the calendar year, which most organizations have different years. So if their fiscal year is July 1 to June 30th, we don't know if this event was held in the fall of 2012 or if it was held in the spring of 13. You know, where in that fiscal year did this activity occur? Because we only care about January through December of 2013. And their other issue is the chapter relationship, and we're not quite sure what the chapter did versus what a parent organization did. So the third option a charity has to apply to your area is as a statewide organization. And as we get more statewide campaigns out there, this is not germane to what you're doing. Every organization in your state is local. But campaigns that are located in states that have multiple campaigns, which is the majority of the states, statewide is an option. And it can be pretty tricky. So an organization must show that they're providing services in at least 30% of the geography of the state or 30% of the target population in the state. So we talk about geography. It may be showing the number of counties in the state and how many of those they actually provided services in or assisted residents of those counties. If they can get up to 30%, they're fine. For target population, they have to document the population they're working with. So maybe they are a colon cancer organization. They would want to go to the state health department and provide information on the number of Georgians who have colon cancer and then what they did to assist those individuals. And if they can show 30% of that population received a service from them, then they're golden. A couple of misunderstandings that comes to statewide charities is that they have to have an office in your state. And that's not necessarily true. They could be 5 states away. It could be, you're starting to see a lot of national organizations build regional offices. So they're kind of getting away from the chapter model, and they may have a Southeast region, a Mid-Atlantic region, New England region. They could still qualify on the statewide basis. Even though they're 3 states away from Georgia, if they can show that what they're doing impacted 30% of the target population or 30% of the geography of Georgia, then they're fine. Statewide organizations also don't have to have the hours of operation or dedicated phone line requirement that's used for locals. So here are some examples on the statewide front. This is a group in Georgia that's providing scholarships bi-monthly. And then they provide us with the information on the individuals. They tell us how much they received. They clarify that this is going out throughout calendar year 2013. If these all added up, the slide wasn't long enough to add in more counties, but we'll pretend that it was enough to show that 30% of the counties in the state of Georgia had recipients of this scholarship, then they would qualify on that basis. One that doesn't qualify is an organization that's providing free ground transportation for cancer patients by encouraging rental car companies to donate vehicles to the patients. So they give us the number of individuals served in the counties. And the problem that I have with this one is that we don't know what the charity actually did. Did they actually provide the cars to the individuals, or was their role just encouraging another entity to donate the vehicles? So they would have to give us more information to show their role in this service and that it was substantial enough to qualify for CFC eligibility criteria. Now I'm going to stop there. That's a lot of information in a few minutes on attachment A. And this is the trickiest part of the application. So I just want to open the mic if there are any questions about this part of the eligibility. Robert.
Hey, Curtis. Robert Jennings, Greater Olympic Peninsula Campaign. Every year we struggle with agencies that don't meet any of these things technically. For example, a scholarship foundation doesn't exist in an office year-round. They have an application period, they process those applications, they award the scholarships, and then they're done until the next year. We have search and rescue organizations that are activated by typically law enforcement. And so having offices is not really conducive to efficient use of their funds. How do we handle those and process those applications? Can you touch on that? We struggle with it every year.
Yeah, they would not qualify under the current rules. The 15-hour-a-week requirement is an annual thing. They can't be a seasonal organization and then they're gone from public view for the other 6 months out of the year. So it has to be a year-round operation. Even though the actual service they're providing may only happen sporadically throughout the year, that's okay. But they have to be a 15-hour-a-week operation throughout the entire year.
Okay, how about like search and rescue?
It's the same thing.
They have to have an office.
Yes.
You won't ever waive that?
Not with the current regs.
When they apply to OPM for a waiver, you won't give it to them?
Well, all right, let me talk about waivers quickly on that point. When an organization appeals a denial to OPM, they have the ability, or they have the right to say, I have an extenuating circumstance, and so I need a waiver of Rule X. So in this case, I need a waiver of the 15-hour-a-week rule. And because it is the director of OPM, not the Office of CFC, who reviews the appeal at that level, the director can say, all right, I'm making an exception for this group. These exceptions are just for 1 year, and it's based on, I just had this, we had a tornado go through. We were in Oklahoma. We were devastated. So we weren't able to meet the 15-hour-a-week requirement. That may be something the director could consider. But if it's an ongoing situation with a group, I am very doubtful a waiver would be provided.
Hey, Curtis, how you doing? Dan Russell, Southeast North Carolina, home of Fort Bragg and center of the universe, as we call it. To really answer that question, I think part of that is they can operate their business or that function out of an individual home as well, as long as they show that they're 24/7, because like a rescue agency, they are 24/7. They get called out at any time, so whoever that individual that is in charge of that organization could document the fact that this is our 24/7, business address where we operate out of, along with the phone lines as well, because then they're not doing that. So they could have an ability to in a roundabout way, circumvent that portion by showing that they are a 24/7 by documenting that this guy's home is our operation. we do operate out of this. This is where they call if they need us out 24/7. Would that not qualify for that organization using that same logic?
Well, an organization is allowed to use a portion of a residence as their office.
Mhm.
That is part of the regulation. But they still have that 15 hours per week. So if they're saying that 15 hours a week, are set aside where the public can come in if there are questions, whatever the services are they're providing, then
There you
they will
go.
meet that requirement.
So that would take care of your issue. Okay.
Any other schedule of services questions? All right. Moving on. The second document that you're going to take a look at is the IRS determination letter. This is really important because every entity in the CFC must be recognized by the IRS as a 501c3 tax-exempt organization. There are many different types of tax-exempt entities out there, but only C3 have that tax-deductible benefit. And so when somebody gives through the CFC, they know that they can write this off on their taxes if they're eligible to do so. So there are three different ways an organization can document this in their application. You got the one at the top where they are not part of a group exemption, and this is the most common and it's the easiest to review. And that's where the IRS has issued a letter to them with their name on it, their address, that says you are 501c3. Nothing else you got to look at. These other two get a little harder. The second type, the second most common type, is a charity that's part of a group exemption. And these are usually large national organizations that have many chapters around the country. And what the IRS does is says instead of issuing a letter to every single one of your groups that may come or go throughout the years, I am issuing a group exemption to you as an organization, and you tell me whenever organizations come and go from your operation. So in this case, what we want to see is the letter from the IRS that says the parent organization, the national group, has a group exemption. And then we want to see the attachment where they sent to the IRS a listing of their affiliates, and the organization that's applied to us is on that list. It's there by name and it's there by address. And then you've got this third option of chapters and affiliates. And these are where groups are not necessarily recognized individually by the IRS or part of a group exemption, but they're the local chapter of an organization. And they're part of their nonprofit or tax-exempt structure. In this case, we need the letter from the IRS to the parent organization, and then we need a letter from the CEO of that organization that says that the local chapter that applied to your campaign is in good standing, that no one made this up, this is a valid group. They're part of our organization, and they may even be able to say they're part of my audited financial statements or whatever additional requirements are in the application. That's an annual letter that the CEO would have to provide to you as part of the application. And that letter has to be dated on or after October 1st of the fall before the application cycle. So any chapters or affiliates who are applying to the 2014 CFC would have to have a letter from the CEO of the parent organization dated on or after October 1st, 2013. And then we have a unique entity out there, and this only applies to campaigns that have military bases. If you don't have military bases, you can just tune out for a little bit. These are family support and youth activities, although you'll hear folks refer to them as MWRs more commonly. Those are morale, welfare, and recreation groups. And these are nonprofits that exist on the military base to support the men and women of the armed forces and their families specifically. So these do not have IRS letters. They're not part of a group exemption. They're not chapters or affiliates. They exist solely for that base. We will accept these if the commanding officer of that base sends in an annual letter that verifies that the organization exists, it's on that base, it's part of their structure. And specifically, they have this verbiage in the second paragraph of this presentation, that the organization is a non-appropriated fund instrumentality that supports the installation's MWR FSYA program. The IRS says without that specification, they are not tax exempt and they cannot be in the CFC. So we have to make sure that verbiage is there. In the past, daycare centers on federal properties qualified under this provision. We learned through the IRS that they do not, because they cannot follow this non-appropriated fund instrumentality clause. So they do not have the same tax-exempt status. They would have to go out and get their own IRS letter from the IRS. Now, you're collecting this information in the applications. You're going to double-check them. You, the PCFOs, are going to be entering all this data into what we call the charity registry. And if you're not familiar with it, tomorrow during the PCFO forum, Marcus Glasgow is going to walk you through it. The charity registry gives us an opportunity to make sure that anybody who applied to you is recognized by the IRS. And if they're not, then we're going to ask you to provide us with that letter from the CEO or the group exemption letter and let us just double check that this group is tax exempt before you can print them. What we do not want you to do is accept an organization that you were not able to verify through OPM as being tax exempt. This would be a reason for denial if we cannot determine that they're on the IRS Business Master File of charities. So do not issue any letters that say you are approved contingent on OPM's approval or OPM's finding that you are tax exempt. The answer would be a denial, and then they have the appeals process to provide the documentation we need.
Curtis, you want us automatically, as we've done over the last few years, to see if our attorney automatically scan and fax and send those letters directly in, because we know they're not going to show up.
Dan's question was if we wanted them to automatically send any of the MWR letters, the commanding officer's letter that I just talked about, if we want those automatically sent to us. I'm actually going to hold off on answering that and have Marcus answer that tomorrow, since that's going to be part of his process, and I know he stepped out. All right, so I got a few myths on the IRS verification process, and again, these are all wrong. And that is that the IRS letter has to be dated. You're going to see all kinds of IRS letters. Some of them are going to be back from the 50s. Some of them were issued last week. And they all are different formats because the IRS kept changing it over the years. We don't care what that date is, and we're not requiring that they keep getting new letters. As long as we can see that they had tax-exempt status at some point, that gives us a starting point if they are no longer on the IRS Business Master File to do the research to find out what happened, when did they lose that tax-exempt status. And that helps the organization as well figure out how to resolve the issue. Another myth is that the letter has to have the employer identification number on it. Again, the IRS has different formats for its letters over the years, and you're going to find some that have handwritten EINs on them and others that have no mention of an EIN. So we're not holding that against the charity. But the charity is going to give you the employer identification number on the cover page of the application, and it's going to be on the IRS Form 990 that we're going to talk about in a minute. And as long as you've got that and you're providing that EIN to us along with the charity name, we're able to go to the IRS and make sure that they're still in good standing. And then the third bullet is what I just talked about, where campaigns can approve organizations on conditional bases. And the answer is no, either charity is in or it's out. There's no such thing as a conditional approval. Yes, Barbara.
Just a quick question on the new revocation notifications that we got. So the L3 that we got was dated 12/3, which has all of the verified charities. Mm-hmm. And then, a couple weeks, 3 or 4 weeks later, we get the list of charities that the IRS no longer recognizes. Mm-hmm. Let's say a charity finds themselves on their list and they fix whatever it is. Are they allowed to add that to their application during the appeals process?
Yes. Okay. If the organization had tax-exempt status and lost it, but is able to gain it back before we're done with our reviews, we're fine. Everything's good. But if they didn't have tax-exempt status at all, they were still applying for that status at the time of your application deadline, then they're not eligible. Even if that letter comes in before you're done with your appeal reviews or whatever. The fact of the matter is they didn't qualify on the date of your application deadline. Okay. Any other questions on IRS verifications or IRS letters? Yes. Is it none?
We had an issue where our organization, the 990 was in one name, the application was in another name, the IRS letter was in another name. And we had an issue because nothing matched.
Right.
So you advised us that they need to get that, the letter in that showed what the correct name was. So I just wanted to say that just in case somebody else had an issue.
Thank you, Cynthia. Yeah, that's a good point to bring up that I didn't raise. She was saying in her case, she had a charity whose name varied among the application, the audit, and the 990. And so she came to OPM for advice. Anytime the name changes between any of the documents that you're reviewing in the application, the charity is required to give you something called a DBA, and that stands for doing business as. And that's, or assumed name is what you may hear others refer to it as. And that's where the IRS or state government says that, Curtis Rumbach could do business as Britney Spears. So as long as it's on the record with the state and we have that documentation, we're fine. But if the names vary and there's some key word of the application that's different from one document to the next, we're not going to make the assumption that it is the same group. We're going to require that they prove it to us.
On how exact that name has to be. We've chosen over LLC, Inc., or capital INC, or capital I, capital LLC. How exact does that name have to be?
Okay, his question was how exact does the name have to match the IRS letter versus the documents. And anything that is a minor word that has no impact in the organization, such as the or Inc. versus incorporated or leaving incorporated completely off, that's fine. Those are really minute details. But if somebody adds national onto their name and it's not part of the name on the IRS letter, then that's a significant variation of the name, and then we would require a DBA. But you can exercise some judgment on those minor words where you still know you're talking about the same group. All right, so let's go on to audits. When it comes to the CFC, some organizations are required to have audits and some are not. The line in the sand is the total revenue of the organization. And you determine that from the next attachment we'll talk about, the IRS Form 990. But if the 990 shows that they had less than $100,000 in total revenue, then they do not need to comply with the audit requirement. If they have more than $100,000, they have to be audited every year by an independent CPA in accordance with what we call generally accepted accounting or auditing standards. And the abbreviation is GAAS, GAS. And they have to account for their funds in accordance with generally accepted accounting principles. That's the GAAP. Now, GAAP requires that the organization use a method of accounting called accrual. So there are different kinds of accounting methods. The two most common are cash and accrual, although there are some other versions where modified cash or modified accrual. Any group that's over $100,000 must have the accrual. And what that means is when they're accounting for their funds, they're accounting for any future receipts that they are expecting, any expenditures that they've not paid out yet, but it's debt that's on the books. All of that is accounted for in their financial statements. And it shows the long-term fiscal health of the organization. If they're using anything other than that, then they're just showing you how they're doing as of that day. And it doesn't tell you that they're about to go bankrupt tomorrow whenever their mortgage is due. So we have to have that accrual method, but we waive it for anyone under $100,000. Those that are required to have an audit are going to have to give you a document that shows that the independent CPA audited statements for a fiscal period that ended on or after June 30th of 2012. Anything older than that is going to be too old for CFC purposes. And again, you're going to look through the independent auditor's report, and they all look alike. It's pretty simple once you go through 2 or 3 of them. You're whiz through these. You'll be able to find the statement where they verify that the statements conform with generally accepted accounting principles, and they say that my audit was conducted in accordance with generally accepted auditing standards. That way we know everybody's doing everything the same way. Sometimes you'll come across except for statements, and they'll say that I conducted my audit in accordance with generally accepted auditing standards except for inventory because the organization wouldn't give me access to their warehouse down the road. That would lead to a denial. No matter how big or small an except for statement is, you know, how significant the infraction is, it would lead to a denial. They have to have clean opinions from the auditor saying that everything was done completely by GAAP and it was audited completely in accordance with GAAS. The independent auditor's report is going to have to identify the auditing firm or the independent CPA by name and location. So that's usually on letterhead or a footer, but something on there that we would be able to look up this CPA if we need to. And it has to have a date on it, and it has to have the signature of the individual or the firm that conducted the audit. And sometimes it's a corporate signature, so it's more like a stamp or an auto pen, and that's perfectly fine. I'm sorry? The typed name of a firm is what he asked. No, if it is not the signature, they'll have a different signature versus the typed name. The signature is what actually makes it official as the final document.
Yeah, I'm quite familiar with electronic signatures, but I don't think I've ever seen one but one. I usually see Ernst & Young LLC or something.
Yeah, that's what I'm talking about. Yeah, it'll be Ernst & Young's signature, their corporate signature, or KPMG has a corporate signature.
I don't see any signature.
It's not a Times New Roman, it's an actual corporate signature. It's not an individual who sits there. They have a corporate signature for the audits.
Curtis, you said that that document must be provided for anyone that requires an audit. So you've got that gap portion, 100 to 250, that does not have, that certifies they have it, but do not have to send any audit. But then, are you saying that they have, according to what you're saying there, they still need to send in a letter warning of that?
No, and you're one step ahead of me, Dan. That doesn't happen often. Right. So let's talk about the myths. And that is the audit is waived for anybody who's below $250,000. This is confusion created by the last set of regs that we issued. Because those regs set up 3 different tiers for organizations. If you're under $100,000, no audit, you're fine. If you're between $100,000 and $250,000, we require that you certify that you're audited every year, but we're not asking you to submit it with the application. Only if you're over $250,000 do you need to certify that you're audited and show us the audit. So the answer to your question, Dan, is if they're between $100,000 and $250,000, they need to certify that they're audited, but they do not need to provide any additional documentation unless the LFCC or OPM requests it from them. So if you see any red flags in the document, you could ask them for it.
You have no way to determine if there's an exception in there at all without at least a cover letter of it.
Right, exactly. You would have to sample it.
But we would have to assume that everything's correct and you want us to certify everything, you know, for the LFCC to certify everything without at least that letter of it, other than the full audit. They could have an except in there, we never know.
Right. We don't require at that level, so we would not discover that unless we sampled it. Another myth is that the LFCC could waive the audit requirement based on the organization's circumstances, and that's not true. Our office does not have the authority to waive any requirement, neither does the LFCC. That can only happen when the organization appeals to the director of OPM and he or she decides that they warranted an exception. And similarly, a myth is that the LFCC can accept a group with a GAAS or GAAP exception because they determined that it was a small enough infraction that it really didn't impact the fiscal health or the accountability of the organization. And the answer to that is no. Any infraction would lead to a denial.
Does that mean that's not appealable?
No, the question was, is it not appealable? If there's an except for statement in the audit, it is appealable. They would have to seek an exception of the regulation So they would have to show extenuating circumstances. Any audit questions? Yes.
If the audit had the except for, but they supplied other documentation that showed that they corrected it, which has, I think, happened by the accountant, then it's okay, correct?
No.
No.
No,
Okay.
the accountant would have to issue a new audit.
A new audit,
yeah.
okay.
Yeah, they
Okay.
can't say that we fixed it for future years. So in the future, you'll see clean audits. You can't say that because we can only go by the audit that existed at the time of the application deadline.
Going back to tax exempt status, if an organization does not have that CEO letter saying that they're an organization in good standing, but they say, look, we can print off a copy of the national organization's website and you can see that we're listed here as one of the chapters, does that count?
No, because we want the CEO to confirm that whatever document if you were looking at a printout of a website, we don't know how old that is. We don't know if the organization has kicked that chapter out for not meeting its standards. So we need a letter signed by the CEO in those cases.
Do you have an exception for community health charities?
What we do...
Because they have a different application and they usually do print that.
I'll print no, there is no exception on that. They would have to have the CEO letter as well. One thing that we do to help alleviate this part of the process is if the parent organization of these chapters are applying at the national level. When they apply to OPM, they go on, we give them access to this tool online where they can make sure we entered all their data in correctly, they're entering 25-word statements, all of these things. They can also go in and certify all of those chapters in advance. So like community health charities, poor Alan, I don't know if he's in here, but he has to go through, there he's in the back. He has to go through thousands of these chapters of their members, and he has a list that they've provided him, and he goes through and says, this Heart Association chapter is good this year, this Heart Association chapter. He has the documentation behind it. But we do that so that in advance of the charity registry process, you're not going to have to be sending us all these documents. We already have as much of it as possible in the system. So hopefully that'll ease this IRS determination process. And there'll be more on that tomorrow. Again, that's going to be part of the PCFO forum. Okay, and then we're down to the last of the 4 documents, and that's the IRS Form 990. And those of you who have never looked at a 990, it's a very intimidating looking document. It's going to remind you of your income tax return. But what it technically is a public information document. And it's intended for the organization to show the public where it got its money, how it's spending its money, who's on its board, how much are they paying them, how much are they paying contractors. It's a sunshine tool. But it's great for the CFC because most organizations are required to file this with the IRS. They're required by law to make it available upon request. There are daily fines for any group that refuses to provide it. So it helps us verify their certifications. Now, not all organizations have to fill out the 990, and that's because there are all kinds of iterations of it. So it's like your tax form. And some of us have to fill out the 1040 long form. Some of us fill out the 1040 EZ. Well, there's a 990 long form, which most groups have to fill out. Then you got a 990 EZ, and that's for groups with smaller amounts of revenue. There's a 990 PF for private foundations, a 990 T and a 990 N, and I don't even know what those are. For CFC purposes, we have to use the long form of the 990. So if an organization fills out any of those other versions that I just mentioned, they got to provide a pro forma version of the 990 for our purposes only. So what they do is they go to the IRS website and they just download the 990. And then they fill out these sections, the last bullet there on the right, parts 1, 2, 7, 8, 9, and 12. They get to skip most of the document, but those are the pieces that we're focusing on in our review. If an organization was required to be audited because their total revenue was over $100,000, then the 990 they give us has to match the same fiscal period as the audit. In either case, whether they had an audit or not, the 990 has to be for a fiscal period that ended on or after June 30th of 2012. So it's like the audit. Anything older than June 30th of 2012 is too old. In both cases, they have to have an officer sign the document. And you'll see on the first page of the 990, there are two lines for signatures. One is an officer of the organization, and one is the preparer. We couldn't care less if the preparer's signature is on there because it's irrelevant to our review. But we have to have an officer on there so that we know that somebody from the organization is saying this is truthful and accurate. And they can determine who an officer is. I'm sorry, Dan? Yeah, the signature on the 990 does not have to be original. It could be a photocopy. There are no original signatures on the CFC application anymore, by the way. Last year was the first year we removed the requirement that there be a wet signature on the application itself. So now it can be a photocopy, it could be a PDF. It could, if you want to do electronic applications, you can do that. They can send you the PDF copy of the certification statements. Now, one of the differences between the pro forma 990 and the long form 990 is the long form 990 has to give us everything they gave to the IRS. There's one little exception, and that's what's called Schedule B. That's where they list the names and addresses of their major donors. And that is not public information. And it's not germane to what we're looking at, so we do not require it. But everything else should be provided. So a couple myths, I just mentioned these. One is that the preparer's signature alone is sufficient, which is not. We have to have the officer's signature. And the other one is that a group that files a 990 EZ can give us the EZ. The answer is no, they have to do the pro forma version. Okay, I've got 20 minutes and we're almost done. I just want to talk about the governing body requirement, because this goes back to the IRS Form 990 as well. We require that the organization certify that a majority of the members of the governing body serve without compensation or a material conflict of interest. Well, the 990 gives us a great tool to verify that their certification is accurate. And that is because in Part 7 of the form, they have to list every individual who serves on their board in a voting member capacity. They got to tell us how many hours a week. That's irrelevant to us. They have to tell us the compensation amounts for each of these individuals. So what we do is on the very first page of the 990, we look at line 3. Line 3 is where they say X number of individuals had voting positions on my board. And then we go to Part 7 and we look to see if they've disclosed all of those individuals, and we'll determine how many of them have been compensated. So I've got an example here. So this is page 1 of the 990, line 3 I've got circled here, where this group is saying that there are 10 individuals who were voting members of their governing body at some point during the fiscal, or I'm sorry, as of the last day of the fiscal period represented by this 990. So there are 10 people there. Then they go to Part 7 and you see a table like this. They're required to list anybody at any point in the year who was a voting member of the governing body, in addition to other positions that they may have to disclose as well. So what we do is we go to column C. I don't know if you can see the red pencil mark on there. Column C is where they have to identify what position the individual held in the organization. And they may have had several positions. They might have been a key staff person, an officer, and a board member. That's fine. They could have many different hats. But we only care about those that are checked off as individual trustees or directors or as institutional trustees. Those are the ones the IRS says are voting members. So first of all, we count to see, are there at least 10 people on here? Since you told me on page 1 there are 10 voting members as of the last day of the fiscal cycle. Sometimes you're going to find there's not. And if there's not, they have two options. They can either amend the 990 and correct the situation, or the CEO or CEO equivalent of the organization can write a letter and say, I made a mistake. Ed Stanton, listed number 3, is checked off as an officer. He should have been checked off as a director trustee. We'll accept that as long as this isn't some recurring issue with the organization. In this case, we can see that there are 10 check marks, so the organization's fine. But then the next step we take is those that do have a check mark, you're going to follow the row over into columns D, E, and F. That's where they report the compensation they got from the charity that the 990 covers, and then compensation from any related organization. If there is any compensation information in any of those columns, we count it. It could be $5, it still counts. There's no threshold on when it becomes an issue. So in this case, we have just 2 individuals. The first 2 are voting members of the governing body, and they received compensation. This organization is fine because only 2 out of 10 people were compensated. Since they had 10 individuals on their board, if they had 5 or more being paid, they would not be eligible to participate in the CFC because there is a conflict of interest there. Any questions on this? This can be a tough part to grasp. I know the IRS changed this form a few years ago, so it was new to us, I think 3 years ago, and it was kind of a bumpy start. But I'm thinking everyone's got the hang of it now. Got a question?
Trying to make sure if there's an actual 0 in those columns, we can't assume based on them being blank. They must put the 0 in.
That's right. They have to put zeros if there's no compensation. If it's blank,
That was
do
my
not
question.
make the
I'll sit
assumption.
down.
That was your question. We will not assume that a blank column means no compensation was paid. But look at the upper left-hand corner of this page. There's a little checkbox above the section that says name and title. The organization could check that, and that says that nobody listed on here received any money. So they're not required to put zeros in on columns D, E, and F. So that's fine.
Hi, Lisa Guthrie from Central Virginia. If you could go back a slide and provide some additional information about which charities have to submit the full 990 and which ones then submit the pro forma. I'm assuming that those that do the EZ to the IRS do the pro forma.
Mm-hmm.
Is that correct?
Yes, yes.
Is
that
there
correct.
is there a revenue level as a rule of thumb for that?
Well, this is what makes it a little tough. The IRS is changing that target every year. What the IRS is trying to do is get to a point where everybody's doing the long form of the 990, with very few exceptions. So it used to be years ago, if you had revenues below $250,000, I believe, you could do a 990 EZ. It was only the really big guys who had to fill out the long form. Well, they've been lowering that threshold every single year until they get down to, I believe, $25,000 is the goal. Any group over $25,000 at some point is going to do the long form. Anyone below can do one of the other versions. But if they're using one of those other versions, then they have to give us a pro forma 990. All right, let me go over some myths on the governing body. Dan was ahead of me again. Columns D, E, and F of Part 7 can be left blank, and the answer is no, but I should have put an asterisk there because they could have checked that box in the upper left-hand corner I showed you. If they didn't check that box, and they didn't provide any information in any of the columns, D, E, or F, it would be an issue. Another, yes? Okay, so his question was if they didn't put in the compensation amount and they didn't check the box, so they failed to do one of the two pieces, would a letter from the CEO suffice? And the answer would be no. This is a key part of the public disclosure. If the IRS had audited this 990, it would be an issue for the organization. So this is one where we're going to have them sign off on the actual document. If they were required to file with the IRS, we would have them file an amended return, because this is now what the public sees. So they're giving a misperception of the public. It's not that one individual's off, it's that everybody's off. Okay, another myth is that the charities can use some kind of presentation of board information other than that table I just showed you. Sometimes they'll write in, see attachment, and then they'll have a photocopy of their website and the board members. That does not suffice. The IRS says that everybody now must use that exact same format so that everybody's looking at everything in the same manner. And that the last myth is that an LFCC can approve an organization where 50% of the board was compensated and 50% was not. The answer is no. More than 50% of the board have to serve without compensation. If it's 50-50, it's a denial. And the last piece I wanted to go over was just the difference with federations versus independent groups. Federations are required to give you information on their members, and this is key for the PCFO to enter data into the CFC Charity Registry. So they're going to give you a spreadsheet that has legal name, DBA, EIN, all the things on this first bullet. Unless a federation is brand new, meaning it was formed less than a year before the CFC to which it's applying, it has to have an audit regardless of its total revenue. Because a federation is performing a very key function in the CFC, and making sure that they're audited by an independent CPA is critical. They also need to provide you with their board members' terms of office and the meeting dates and locations of the previous calendar year. This is something that their members do not need to provide, independent groups don't need to apply or provide, but we do require of the federation itself. And then finally, the federation has a unique requirement in that it must provide us with a copy of its annual report to the public. And within that annual report, it needs to describe the dues and fees that it charges to its members for the CFC. So they may put in there that we charge no dues and fees. That's fine, as long as that's disclosed to the public. Otherwise, they're going to tell us is it a flat fee, is it a percentage, is it some kind of sliding scale that must be disclosed. And a lot of people think that's a new requirement. It's not. We've had this since 2006. And you find it in the audited financial statements of the Federation. It'll be in the notes. Those are the part, the audit after the actual numbers you're going through, the actual schedules or statements. There will be one little paragraph that says that the organization is dispersing funds correctly. I'm sorry, I'm confused. I just confused that last piece. The dues and fees is going to be in the annual report. The audit requires that they disclose that they were dispersing funds in accordance with the designations from the federal employees. So myth with the federations is that they have to have original signatures on the applications, and that's false. We got rid of that 2 years ago, as I mentioned. So everything can be photocopied. The federations are not required to get applications from each of their members every year, and that's false. You know, this is not genetic. I got this from calls from PCFOs who were surprised to learn that the LFCC wanted to sample members of their federation, and the PCFOs on the phone saying, well, I know my membership and I know they qualify, so do I really need to get them to fill out the CFC application and give me an audit and a 990? And the answer is yes. Federations are just like independent groups. They have to collect this information every single year and verify it every single year. Federations don't have to have a local or adjacent presence in your campaign. So it's a myth that they have to be located there. The federation could be on the other side of the country. As long as it has 15 or more member organizations that meet the criteria as local, adjacent, or statewide to be listed in your campaign, then the federation's in as representing those groups. Federation can participate with less than 15 members. That's completely false. They have to have at least 15 groups that survive the application process, and the federation does not count as a member of itself. So it's 15 members in addition to itself. And then finally, the requirement that the audit verify that the federation honors pledges to members is new and can be waived by the LFCC. Again, that's false. We've had this since 2006. And that's it. Any questions?
Curtis, do they still have to send in the IRS letter that you had us want to take year after year with a federated application?
Yes, federations need to provide the IRS determination letters of every member organization as part of their application. This will help you if for some reason we can't verify them with the IRS. You have a document in your hand ready to show us. Robert.
Curtis, can you speak anything to the online application process? Will federations, I mean, some campaigns are using that this year. Are they putting all of their member agencies in that online application process? Can you speak to the online? at all?
No, no. OPM is not using an automated application or an online application process. Some campaigns are doing it. How they're doing that piece of it, I don't know. But they're permitted to do online applications. There's no issue there. Ron.
Hi, Curtis. Ron Denson, Pensacola, Florida, Escarosa, CFC. And actually, your comment about the Federation members, the members, at least 15 or more in the state to be able to, or in the Federation in your state to be quantified as a Federation listing. Just thinking about that with the nonprofits restructuring themselves, what about the Federation agency itself, out of the state, but they've got 15 members, qualified, so they get listed. Does that Federation agency get listed?
The Federation as an organization
As
itself?
an organization?
Yes, yes. Anytime a Federation qualifies, the Federation itself has the ability to have an employee select it as the recipient.
Okay, even though that office, they don't have an office within the state itself.
That's right.
So, okay, thanks.
You're welcome. All right, we are about to break, and Pam's about to give me the hook. You got it? Well, if you guys have any questions, you can contact any of your regional representatives, me, Mary, or Marcus, and check out the video if this is your first time doing the eligibility process, but you've got this. You're going to be great. Thank you.